Good morning, everyone. I am not Tony Zhang. I am Brian Overby. I am the Senior Options Analyst over here at Options Play. I'll be filling in for Tony today. He'll be traveling. So I think we're just about ready to get started on this event. I'll change things up a little bit, do it a little bit more in my style, but I do want to cover a few things that are happening in the marketplace. I do see that as normal, we have the chat box and we have the Q&A box. The chat box is not available. If you do have any questions, we'll try to make this short and sweet today, but I'm more than happy to try to address any questions that you might have. So let's get started. All right. I'm going to start by just looking at the research report that Tony puts out every morning. Or I should say every week, a couple of times a week, actually. I don't know why that happened. And one of the things that, I guess I'm not going to go full screen, we'll just go right here. One of the biggest things that we're seeing in the marketplace right now is just a little bit of froth in the market, in that September's a really good month, which is kind of surprising. Usually September struggles a little bit overall. So to me, that also adds just a little bit of angst to the market. And for the first time in forever, we've seen an actual high in all three of the major indexes, in the SPX, in the NASDAQ, and in the Russell 2000. Now, this comes after the Fed announcement of a quarter-point rate cut, and that is obviously a strong driver for the small caps and the Russell 2000 index, or the ETF that tracks it, which is the IWM. So I'm going to actually look at a trade that covers the IWM, and we're going to take a quick peek at that. If it makes it very hard to want to get long stocks in the short term. Longer term, as usual, we have a longer term outlook where you definitely want to stay in the markets. But with October right around the corner, we have the VIX right around 15%. And we see interest rates, a couple of more Fed cuts that are expected going into the end of the year, at least according to the CME Fed Watch tool. It just feels like the markets are a little frothy, and markets have like to go down in October. Maybe this might be the October that it doesn't happen. So far in September, we haven't had that volatility or even any downside movement. But then again, we did get a rate cut this week. Now, on Thursday, I think a couple of other big things that we want to look up for. We want to see on Thursday, we're going to have Costco's earnings, and the comments about the consumer are going to be very big. The consumer is probably the biggest concern heading into the PCE number on Friday. Interest rates, inflation that is coming our way by the end of the week. So the core PCE number, and so we're going to have kind of a double whammy in that we're going to have Costco that's going to announce earnings, and then we're also the next morning going to have the PCE. So we're going to get a good look at the consumer based off of those two reports. Today after the close, we got Micron that is going to be announcing earnings, and there's going to be a lot of people that are looking at that. Now, the earnings, the quarterly earnings is almost over with, in that we're at the end of the earnings season, and usually there's a lot of retail companies that are announcing. So heading into this October, I don't really want to do any trades as far as option trades are concerned. And I always want to give the disclaimer that everything that we do today is not meant to be a recommendation. If you're going to trade options, you do want to read the characteristics and risks of standardized options. I always want to give that short disclaimer. But if I'm looking at the overview of the market and where we're going to lean, one of the things that is also interesting to see to me in the marketplace as the market sets a new all-time high is that gold broke out to a new all-time high. So we're having the markets being strong, and a lot of people are equating that to AI and the fact that we have this potential growth. We had the big news out of Nvidia yesterday and OpenAI, and one of the biggest deals that have been done so far in that space, where there's going to be a huge investment on Nvidia into OpenAI, and so because of this, the markets are staying strong, and this would be my rationale behind why we haven't had any pullbacks in the short term here. And so news headlines keep coming out about more and more in the AI space, and the demand and the money that's being spent, the need for energy, and almost just like an influx of cash that are just coming into the markets because of the AI. Who knows if it will pay out? Obviously, the powers that be think that it would, or they would not be putting that type of money into it. At one point in time, people were getting a little nervous about that, and it actually caused some downturns in the market, but now that doesn't seem to be the case. So I'm going to run over to the Firstrade platform, and I'm going to look at my first outlook in the marketplace is the Russell 2000 index. And right now we see that as of now, it's indicating that the market's going to be up a little bit. Let me see if I look at the futures, we got the Russell up just a smidgen, up about 0.1%. We have the Dow or the S&P 500 futures basically flat, and the NASDAQ futures. And the VIX is trading right around 16. Now that's a story for a different day, but the futures going out for the VIX on the October expiration, the normal Wednesday October expiration, is trading right around 18, which I still feel like all these signs are just that there's a lot of complacency in the marketplace, and that always scares you going in to the October month and the October time frame as far as the calendar is concerned. Now, also want to indicate that there's no rhyme or reason. I've never ever read any great thesis as to why October has a tendency to be more volatile than June. But with that said, it still seems to happen. And maybe I'm a part of the problem. Maybe I just always think that it's coming. But like last year, we got a lot of volatility. We got August, September, and October, a lot of volatility. But with that said, let's get to the Russell 2000, okay? So if I'm looking at the Russell 2000 trade, this is an all-time high. And this is where it breached that area right here. And you see the strong movement up heading into the Fed meeting where it was highly anticipated. All the green candles going up and up and up. Then if you go back and you look at the SPY, you'll see a very similar type trade. And I'm just going to use the ETFs that track the indexes for right now. And if I look at the SPY, we have a very similar scenario and a very similar chart where we had the markets come. Let me grab the right one, not the daily. Here we go. Come all the way up. We broke out. Now we have green, 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 green. One red candle over the last 1, 2, 3, 4, 5, 6, over the last 14 sessions. And then, of course, one last one that we see that on, the NASDAQ. Let's look at the QQQ. And we'll do the same thing. Going back for the last year. Once again, here's the breakout. It's almost like you're looking at the same chart across the board, except for the Russell. Now, the Russell has one of the things that when I'm looking at the Russell 2000 index is I always feel like the index has the probability to be more volatile than less, and I feel like the marketplace a lot of times will undercut the potential volatility of the Russell 2000 index. So with that said, that means if I want to get bearish on the marketplace, I don't mind just buying puts outright or doing long put spreads where I expect more volatility as opposed to less. In other words, I have a decent risk reward profile that I would want to do on that trade. Now, I'm first time playing around inside the Firstrade platform, so bear with me here. I don't know if it's my first time, but I haven't been in here too much. IWM, where I'd want to go is out about let's look at the end of October. And let's go, oh yeah, October 31st. I like that expiration. I think that is a Friday expiration. No, that is October. Yep, that is a Friday expiration. And I'm going to look at just trying to say that heading into Halloween, would like to get short IWM. Not that in the long term I anticipate, but enough is enough, right? In that we've had such a big run up that it's hard to remain long all of these indexes going into a very volatile period. Okay, so the way that I'd like to set it up, we're going to go out of the money. Let's go all and hit go. And October 31st expiration, we're going to go a little bit in the money and give ourselves some room to run. So we'll be buying the 245 strike put, and at the same time we need to add a leg. Well, the spread strategy that I would look to do is buy the 245 and sell the 235. The markets are clearing out right now, so we're going to go about 10 points wide. And the last time I looked at that trade, you got a very solid risk reward profile on it. So buying the 245 strike put, going out to the October 31st expiration, and then buying or selling the 235 strike put. Now you have all your parameters in place to try to manage that risk. Let me see if I click on this one. This is the ask price, right? Right here, 245. Yeah, it looks like everything is kind of getting wiped out. Get a quote, add a leg. All right, I'll just let that go. So the other side of the coin is, if I do want to get long something, the one chart that is of interest to me, which also kind of heading into this Friday economic data and the news from Costco, I think this is what's also driving the price of gold up, in that everything's getting a little frothy. People are still a little bit nervous. The consumer is the one entity and their spending that is really keeping the markets up. Worried about on the jobs numbers so far. So this could be a concern. So that also has driven up gold prices, which is counterintuitive, to the markets going up, and also people being nervous about the markets going up. And so the one trade that I kind of like in the gold space or in the bullish category, we're looking once again at the GLD, which is the Spider Gold shares. This is an ETF that actually tracks the price of gold, and it does a pretty good job of it too. So let's go out and look at the 1-year chart, and we see that yesterday we had the breakout. This was a period of consolidation. We had a solid breakout in gold, or what is this one? About 3 sessions ago. And then we hit all the way up to 341. And then now we've broken out above that. And this is a new all-time high in gold, going all the way out to 5 years. So on this side of the coin, I think that this is more of a breakout, that we had the huge run up period of consolidation. Now we have a breakout in gold, and we'll go back to the 1-year chart and want to get bullish on gold. So the chain that I will look at, let's go to GLD and look at gold in general. And if you do have any questions, please do put them in the Q&A box. I'll be happy to address them. I don't know exactly what Tony does on the show every Wednesday morning, but this is what I'm thinking in the way that I'm looking at the markets right now. So if you go out to October and you stay in that same time period, going into the end of the month, and we're looking to do a gold trade, the way that I would set up the gold trade is um, I want to be centered around where the underlying stock is at, in that I'm going to go just as deep in the money as I'm going to go out of the money. So on this trade, I would look to straddle the stock price. With right now, we're showing that gold is actually up about 1%. So we're going to get a fairly big jump on the open in the GLD. So keep that in mind. We still got a little bit of time here before we get the market open. But I with gold, I'm going to go 4 points in the money and 4 points out of the money. So I'd be looking at buying the 346th strike call, and then at the same time selling. And let's go 4 points. We're at 46, 48. I'm off by that. We want to be the 344. That's $8. Yeah. Let's go to the 345. Let's go 3 points. 370. Let's do this one. Now the market's going to move, so I would adjust it, and I want to straddle the stock. So looking to buy the 345. 345 with the October expiration. Strike put, okay. And then see what happens. Chain. And then we're going to go 3 points out of the money. So 348, 1, 2, 3 would be 351. And then we'd look to sell this option contract. So we're buying one and selling one. And what this does is you'll be buying just as much premium as you are selling. So it makes it all about gold over the next month, in that you're taking the time premium out of the equation. It's going to, if you put the trade on and literally gold is at 348 exactly, and you're doing a 6 point wide spread, the spread should trade for $3. And because you'd be buying as much time premium as you'd be selling. Now, obviously, an in-the-money option contract also has an intrinsic value, the in-the-money amount. But if you figure out the time value will be close to what the out-of-the-money option contract is at. All right, thank you, Carrie. I appreciate that. And then the one stock pick that I would lean to, Carrie, if we're looking at a stock pick, talking about Tony and the outlook. Tony's Carrie mentions that Tony usually talks about stocks and not as much with the options. So the one stock that has where I would lean to the bear side, and the one trade that I've kind of highlighted in a lot of webinars using Tony's research, because I will go to Tony's research to try to pick up option trades for the members of Options Play. And CZR, which is Caesars, is a very interesting play in that, once again, you're talking about the consumer, you're talking about spending, kind of goes hand in hand with everything that we said going into the end of the month, being a little bit nervous about things in the short term. And that's, let me just find it real quick, like Caesars Entertainment. Now, very weak as far as the fundamentals are concerned. Earnings overall, if we look at the forward PE, Right now we have a negative PE, but if you look at the forward PE, it's almost double what the industry standards are at. The net margins are not strong. Revenue growth is underneath the industry. And one of the biggest things that is probably happening in the Caesars entertainment world and with Las Vegas in general is the mass of availability to gamble via the online platforms. And there's kind of a feeling that they're a little bit behind the times on that, and that's so this weakness that has developed in this space. This is the one stock that if I'm thinking about getting bearish on the marketplace and looking at a company that is fundamentally weak, Tony's downside target here inside the research report actually got a bearish idea. That actually popped up inside the options play platform, is down around the $18 side of things, and all this is more a momentum trade. And whenever you get an alert like this, it means that we got a period of consolidation, and generally had a counter trend move to the downside on this, and we're looking at a downside target of about $18. So we have markets that are a little toppy. We have gold hitting an all-time high. We have not had a downturn in September, and we're heading into a calendar period that is a little sketchy too. Now, longer term, Fed continues to cut rates. That's overall good for the markets. We'll see what the bond market does along with it. If the bond market can give up a little bit on the interest rates, but if the bonds, if interest rates continue on up, well, the Fed, it's little that puts a little bit of a scare in the marketplace, and that's what happened the last time that the Fed cut. What would be a good, okay, so I got from Anonymous, what would be a good option trade if I expected a significant stock market crash within the next 2 years? Bearish leap spread, but nobody ever said those were good. And I would agree with that. Okay, so the question is, if I want to get longer term bearish on the market, would I want to do a leap spread? And my answer to that would be no. With the markets trading at, with the VIX and the volatility, which is a 30-day volatility, right, is right around 15%. And like I said, October, it surprises me that the futures contract in October at the October monthly expiration, I think it's October, it's the Wednesday, the 22nd, that is trading at around 19 or around 18 as far as implied volatility is concerned. So the moral to my story is, if you're looking to get longer term, I don't mind actually buying puts outright. So here's the thing, is that if you do a spread and the market does come down, the option contract that you're selling wants the market to go up. So it makes it hard to take profits in the short term on a longer term spread. So let me say that again slowly, in that if you're thinking about doing a long-term leap spread, obviously you can pick the underlying, the three that we talked about today, the QQQ, the SPY, and the IWM. Those are all the ETFs that track the indexes. And then the last one, or obviously you can do the indexes directly if you'd like to. But buying a put versus buying a put spread for the longer term, the reason why a lot of people don't get excited about this is spreads will max out closer to their expiration. And in particular, if you are anticipating a black swan event, if the market does go down in a quick fashion, implied volatilities also jump. So that even makes it harder to get out of that longer term long put spread. So if I'm thinking about getting bearish long term on that trade, I would have a tendency to just buy the puts outright at this point in time, especially because of the complacency in the marketplace, and vol is cheap. Vol is cheap. Yeah, down 30%. Yes, I would definitely think about that. if you're going to go out that long in time, you're going to have to pay up for it. Now, you could sell shorter term calls against it and almost do a reverse leveraged covered call. But then again, that kind of defeats the purpose, because if you do get that downturn in the short term, that can offset a lot of the gains. So I still go back to if I'm going to get longer term bearish with the VIX at lower levels, I would rather just buy the put outright. Now, in the short term, the VIX is a different beast, but the VIX is an alternative too, to be able to just buy calls in the VIX. Now, that would be more of a shorter term outlook in October in general, but the VIX is a different beast. If you ever want to learn about VIX options, I have a good article that I wrote on X.com called Decoding the VIX, and it talks about how important the futures are in the price of the options that trade on the VIX index. The futures matter way more than where the actual index is at, which is considered in the futures marketplace the spot market. All right. I hope I'm doing okay pinch hitting. Do you have any other questions? Other reports on the bull side of things? We also, we had a bearish sign in Google, because Google's getting a little frothy too. A lot of the Meg 7 are getting a little frothy across the board. Let's go look at a couple of the other stocks. So the one that I highlighted because I was looking for bearish trades is CZR. Philip Morris also is an interesting underlying to get bearish onto, a little frothy on top. This is all about froth. I guess if you counted how many times I said frothy today, it might be a new record for me in one webinar. In this space, if you're thinking, like we mentioned, Google getting a little frothy, Micron's going to be announcing earnings today after the close. ELV is a healthcare company, and one of the stocks that, let's go back to the platform, that has an interesting chart that I noticed, I'll share this with you, is UNH in the same space. And if you have been watching the news, you know that UNH was driven down by some bad news, worried about Medicare and Medicare payments and et cetera, et cetera. So the stock was beaten up, but UNH is, one of those too big to fail companies. How come I'm not getting a quote on it? I might have got logged out. Let me see where it's at. That's what I'm seeing happening here. Oh, there we go. Good deal. United Healthcare, and I really wanted to show you the chart. There has been some insider buying from big names in it, and then there's also a well-known person called Warren Buffett that Berkshire Hathaway over the last quarter or so bought about $1.6 billion worth of the stock. And here's where the stock is at. So we had the precipitous move to the downside, and just overall the chart has looked a little scary, right? If this is a 5-year outlook on the chart. But now we're having a bounce back, and the fill the gap situation, this is, to me, this is a counter trend. This is usually healthcare companies do well. It's almost, it's a play similar to something where you're looking for a safe haven. If you're buying gold, you might buy United Healthcare, right? If you're worried a little bit about the jobs numbers and the PCE coming in, Healthcare usually still does all right. The stock's been beaten up, but the insiders have came back and said that we're willing to buy. This is obviously an interesting area. There's a lot of consolidation right here before the big downturn. Now here we are back here, and we have this gap to fill to the top of this channel. So we're laying right around 350, right, is the top here. And then the top of this candle, which would be a gap, is up around 380. So broke out here, consolidation, thinking that when this broke out, when the stock broke out on this day, thinking that it might go all the way back up to the 380 level. But then from there too, you still have this gap all the way back up to this level of resistance, right around the 364 level. So this chart looks interesting right now because stocks usually want to have on a technical basis, because stocks usually like to fill gaps. So that's an idea if you want to get bullish on the marketplace, avoiding the Meg 7. Obviously, NVIDIA is its own beast, and that I think what really propped the markets up yesterday was the fact that that NVIDIA deal was mentioned, and there's once again so much cash that's going into the AI space and propping up the markets. All right, I see a couple more, and then we'll leave it there. Yeah, gold. You know, you could make the argument. So the question here is, what would be a good asset to get long if you're worried about stagflation? And gold, and that's part of the reason why gold is where it's at. United Healthcare, that is one of the stocks that will usually do good in a weak economy. So looking at the weaker, the sectors of the market that haven't performed as well as the tech stocks would have a tendency to do well in a weak economy, and stocks that are trading at decent valuations overall. And United Healthcare is so I basically answered the question before you asked it. CS, just have your initials in there. But bonds, looking at interest rates, the bond market is still strong too if you're worried about stagflation. The interest rates are still at even though they've came off a little bit since obviously the Fed meeting, 2-year about 3.6% or so, still very good, very good alternatives to just being in the market. So that would be the third one that I would throw in. And then you can make the argument with Bitcoin, right? Is Bitcoin the new gold? Is it not? I'll leave that for other people to think about. And there's ETFs that track it now. Coinbase is an exchange that trades that and in that space. So there are other alternatives to trading those using the marketplace. All right. Well, 9 o'clock. That's about it. Any other questions? I'll give you one last chance for questions. Well, then I think CS. Then I think you're right in assuming the gold aspect. As far as the markets, almost everything will come down if you get to the point of stagflation. Markets are still going to be tough. But if there is like one sector that usually outperforms, it would be in the healthcare space. People still get sick even in bad economies. All right, that's it. Thanks everyone for coming. My name is Brian Overby. I am the author of the Options Playbook, if you want to check it out. The Options Playbook, very straightforward. And filling in for Tony. So great first event that I've had when Tony's actually on a plane right now. So Tony will be back next week, and thanks for stopping in, and till next time.